Hello everyone, I hope you're well. Today we're going to talk about the energy crisis in Europe. Over the last few days, we have received more and more negative information about this sector. We have a lot of members of government who are talking about electricity and gas shortages for the coming winter. They're also talking about rationing. My goal today is to do a full review of this crisis. First, we're going to look at the electricity market. Then we're going to look at the natural gas market. After that, we're going to look at economic indicators in Europe. And then we're going to see what are the options for Europe to get out of this crisis. All right, let's do it. In Europe, political leaders are talking more and more about this energy crisis. So, for example, here we have in France, the Prime Minister, she's talking about rationing of energy. They want the companies to decrease their use of energy by 10%. This is a huge decrease. They're talking about shortages, also thinking about an exchange market of rights to consume. I don't know what it means exactly, but it seems concerning. And of course, they're trying this to avoid, the shortages. But we have here another member of the government, of the French government, talking about possibility of, gas and electricity cuts during the winter. Let's take a look at another country, Switzerland here. So in Switzerland, they have been more rapidly warned the population about this energy crisis. Now they're going a step further. They're talking about possibility of riots here. They say that citizens must prepare for extreme scenarios in case of energy shortages. They say that obviously the population can be very upset if they cannot withdraw money from ATMs, if they can no longer pay by card in a store or refuel at a gas station. And also there's another person in Switzerland who is urging the citizens to stock up candles and firewood for the coming winter. And then if we move to the European Union political leaders, they are also started to talk about this subject a lot. And there's an emergency meeting which is set up for September 9th, where they're going to discuss specific emergency measures regarding the energy situation. They are talking about putting maybe a cap to the price of gas used in the production of electricity. This is the first discussion, so I don't know if they're going to move forward, but as you can see, we have more and more concerns in Europe about this energy crisis. Now let's take a look at the price of electricity in Europe. So what you need to understand first is that except for Portugal and Spain, all the rest of Europe is interconnected. It means that it's only one network of electricity. And so, for example, if there's a power plant in one country who is producing electricity, it's gonna send electricity to individuals and company in this country, but also it can send this electricity to other country, the neighbors. So it's working like this, and because of this, there has been a system to evaluate the wholesale price of electricity. So that's what you can see here. This is the wholesale price, for example, in France. There's one in each country. So for example, in France, as you can see, we have seen a very strong increase here over the last 2 years. This is the same in Germany. A very, very strong increase over the last 2 years. So to give you some order of magnitude, if we look at, for example, wholesale price of electricity in France over the last 5 years, we've seen a a 20-fold increase. And if you compare this with the evolution in the United States, for example, here you can see the evolution in the US, and it's only over the last 5 years 20% increase approximately. So as you can see, it's completely different. There's a huge problem in Europe right now. What you need to understand is that to calculate this wholesale price, basically the system is based on the marginal cost. It means that to evaluate this price, they are using the cost of the most expensive power plant, the one which has the most expensive production costs. And today in Europe, this is a gas power plant. So basically, right now, the price is following the evolution of the price of the gas. That's what's happening. And as you know, this is the evolution of the natural gas price in the European Union. And obviously, as you know, probably, we have seen a very, very strong increase over the last 2 years. On the contrary, for Portugal and Spain, it's different because they are not on the same network. They have decided to go out, and as you can see, they are not using the same electricity network. As you can see here, the price in Spain it's much lower compared to France. There's something like a 3 to 4 fold difference between the two. It's 190 here compared to more than 700 in France. This wholesale price is impacting directly the companies, but not directly the individuals. It depends on the country. For example, in France, there's a system, it's called the shield, and the idea is to not to have too big increases in the price of electricity for individuals. So there's a limitation here, and for the moment and until the end of 2022, there's still going to be this shield. After that, we don't know. Probably the government is going to continue with this kind of cap, to avoid unrest, maybe because the population won't like that. If we look at other countries, for example, like Belgium or United Kingdom, for this one, there's no shield. And for example, in the UK, I've seen that there's some, 1 year increase of 80% in the electricity bills. So, and it's the same in Belgium. So there's huge difference for the individuals. So regarding hydroelectricity, we also have some bad news in Europe. For example, here in France, where hydroelectricity amounts for 12% of the production of electricity in the country, well, there's been a 20% decrease in the production since the beginning of the year. It's because of drought, low rainfalls this year. And we had the same problem actually in Norway. The problem is that Norway usually exports a lot of electricity to the other parts of Europe. They are a big producer, but this year also because of low rainfalls, the lakes are not full. Usually they are 80% full. That's what they say here. And this year it's only 68% full. So they have decided to stop the exportation of electricity. So now let's talk about nuclear electricity in Europe. So we're going to take the example of France because this is the biggest producer of nuclear electricity. Basically, in France, 2/3 of the electricity is coming from nuclear power. So the plants has been created in the 80s in France, and the production has increased until the 2005. Then it's the production is there's kind of a plateau in the production, and then afterwards it is beginning to decrease after 2015, more or less. So there's a plan, in France to shut down some of these nuclear power plants. So there has not been a lot of investment in the nuclear sector over the last 20-30 years, and a whole program to shut down some plants. In addition to that, the problem is that nowadays we have some corrosion problems in some plants. 12 I mean, the total number of plants in France it's 56, and in 12 of these plants we have some corrosion problem. In addition to that, there's some maintenance problems. So in the end, half of these plants are shut down currently. So and they say that the reparation might last several years, for the corrosion problem. So we cannot say that this sector is gonna, I guess, help France and Europe, during this energy crisis. What you need to understand is that each one of these plants, they have a more or less 40 years duration, and maybe they can last more than that, but we're not sure. Nobody is sure. And most of them were created in the 80s, which means that if we need to develop this sector, we need to invest now, create new power plants, but this is gonna take some time. They will be ready only in maybe 5-10 years, something like that. And we used to be, France, I'm saying we because I'm French, but France used to be, a very good, specialist in the nuclear power sector. The problem is that today it's China. China is the specialist, and if we want to go quickly, maybe the only way would be to buy, nuclear power plants and the technology to China. So now let's talk about the natural gas market. We've talked about electricity, but electricity is only 40% of the energy consumption in Europe. So regarding natural gas, as you know, we have a lot of tension in Europe. So for example, we have some more news right now. So for example, regarding the pipeline Nord Stream 1, again, then there's going to be another maintenance on this pipeline, and the flows will be suspended again during 3 days between end of August and beginning of September. So of course Russia is saying that it's because of maintenance, and on the other hand, in Germany they say that they consider the supply cut to be a political maneuver. So anyway, what we can say is that the flow keeps decreasing from Russia to Europe. We have also this other news. Gazprom has decided to stop the gas deliveries to France. Engie is a gas supplier, the biggest in France. So they say that Gazprom, they have not received full payment for the gas supplied to Engie in July. So I don't know if they're asking for payment in rubles, and maybe that's the problem. I don't know. But anyway, we also have this problem regarding the gas storage inventory. This is a little bit better, because in Europe they have reached 80% of the capacity, so it's pretty good. Some countries are gonna try to reach 1,000% before the beginning of the winter, so in 1 or 2 months. I don't know if they will manage it, but it's better. Okay, it's much better on this indicator. Now, if we're talking about I mean, export from other country to Europe. For example, the US. US is a big producer of natural gas, and they are sending some gas to Europe. This gas is liquefied, so it's liquefied natural gas, which is sent by boat to Europe. We can see the figures here. It's not big, but we have the biggest to France, and also some gas, a lot of gas to Spain. If we look at the evolution, as you can see, so the last figures are from May 22, so we have nothing more recent. As you can see, it's not increasing really a lot. It's stable more or less, and it's the same for Spain. So I mean, there's some limitation clearly in the number of ships, also in the infrastructure in the ports in Europe. I don't believe this can be increased a lot. I mean, not quickly, because there's some infrastructure which needs to be built, and so in the short term, I don't believe they're going to be able to increase a lot these numbers. If we look at the relation with the US political leaders, here we have a declaration from the US Energy Secretary, and basically she's urging US refiners not to increase fuel exports. They are talking about gasoline and diesel. So, I mean, it shows that clearly they are defending their interests, and I understand that their storage is pretty low in the US. They also had significant increases in the prices of gasoline and diesel. So yeah, they're defending their interest, and so to conclude, we cannot say that Europe is going to be saved by the natural gas from the US. One of the consequences of these very high prices for gas and electricity could be desindustrialization of Europe, meaning a significant decrease in the industrial capacity in Europe. We have here some example. Here in Belgium, we have, for example, a steel producer called Aperam, who is shutting down its production facility. There's also a producer of fertilizer, Yara, here in Belgium, who is shutting down its facility. Fertilizer producers are very impacted by the high gas prices. They are using natural gas to produce nitrogen fertilizers, and on this subject we can see here a big map of the Europe fertilizer, for which there's a decrease in production, or for which they are shutting down their plants. So it's a tiny, but you can see they're saying here, facility shutdown, 15% reduction, 35% reduction, 75% reduction, and this is all over Europe, as you can see, especially in the fertilizer market, okay, which could have an impact on the food production afterwards. So this is quite concerning. And here, as we have an example in France, this is the energy which are used in the industry. So this is the breakdown here, and as you can see, the two biggest are electricity, 35%, and gas, also 35%, which means that if there's a problem in the offer of these two two types of energy, or if the prices are too high, well, the industry and the company in the industry sector, they're going to decide to move to another country probably where there's more offer and the price are more reasonable, like the USA right now, for example. As a reminder, you need to understand that there's a direct relationship between the GDP and the volume of energy that you consume. So you can see here the relations between the two. So we have the energy use. This is not the value, this is the quantity, the equivalent in oil barrels. And on the other side, you have the GDP. So there's a perfect relationship between the two. And this is very important because it means that if you have to decrease your energy consumptions, and today that's what's happening in Europe. For example, in France, they are asking the companies to decrease their energy consumption by 10%. Well, when you do that, it means that you're gonna have most probably a decrease by the same percentage in your GDP. Now let's take a look at the economic indicators for Europe. So if we're starting with a consumer confidence index for the entire European Union here, so you can see that we are at here minus 26. So it's basically historically it's the lowest point for this index. So very bad figure here. If we take a look now at only Germany, and this we have here the IFO business climate index. So we're here at 89 more or less. So except for the great financial crisis and the pandemic, you can see that we have reached an extremely low level, never reached before, except for these two crises. And now if we move to the Eurozone, we have two index. The first one is the manufacturing PMI. So this one has just gone below 50. As you can see here, we are at 49.8. We've reached the 25 or 26 months low for France, Germany, Spain, and Italy. And if we add the services, we have the index composite PMI. Also for this one, we're going below 50, 49.9 here in August 22. We also have a 25 months low for Germany. So clearly these two indicators, these PMI, they're showing, it seems that like they're showing an entry into a recession for the Eurozone. If we look at now the currency, the euro, so you need to take a look at the spread between Italy 10 years and Germany 10 years bond. So we are today at 230 points. So going up since the beginning of the year 2022. It's not dramatic for the moment. So we'll see. We have to monitor this. And the other indicator, very important, is the target 2 balances within the Eurozone. So as you can see, we have the figures for July here, July 22, and it seems that there's an acceleration for Italy over there in green. The deficit is increasing significantly over there. It's not as much as during the euro crisis here in the years 2011, but also we have to monitor this because there's clearly an acceleration here for Italy. Now I would like to show you some information about the balance of trade in the Eurozone. So here we have this chart showing for goods and services, the balance of trade in the Eurozone. And as you can see, there's been a significant change over the last few months or a few semesters. So here, as you can see, as from 2012, more or less, we have a structural positive balance of trade for the Eurozone during several years. But during the year 2021, we see a start of decreasing balance of trade, and now this is significantly negative. Okay, there's a big deficit here. So this article is very interesting. This is from Natixis because it is trying to explain, where is it coming from. And here you have the same chart here, but there's a comparison with other countries, especially Russia and OPEC countries. Okay, so countries who are selling a lot of oil, gas, and commodities. And clearly, as you can see, we have here the decrease of the balance of trade of the Eurozone, and at the same time, a big increase in the balance of trade for Russia and for OPEC countries. So clearly, they are benefiting from these surging prices in commodities and in the energy sector. So to sum up, the impact of this, it can be significant. First of all, it's creating some kind of poverty in Europe. Clearly, it's gonna push down the value of the euro. Clearly, this movement, and also there's another significant impact, because when Eurozone was making this much profit, they were investing this money into T-bills, US T-bills, which financed the US deficit. Okay, but now they're not gonna have this money anymore. So now what we need to think is what assets are going to choose the Russia and OPEC country to invest their money, because they're going to have a lot, and probably, that's what I think, they're not going to choose T-bills. Okay, they want to invest this money in something else. So it's going to be harder for the US to finance its deficit from outside investors. We never know. Maybe this change could have an impact on the on the international monetary system. Let's take a look now at the CPI in Europe. So here you have a chart where you can see all the inflation rates, CPI rates. As you can see, so the average is approximately 10%. 10% per year for the whole Europe. We have big difference between the countries. It's very high in Estonia, for example, 23%, and extremely low, for example, in Switzerland, 3.3%. But Switzerland it's special because it has inflation has been very low over there for a long time now. So it's not very surprising for Switzerland. I understand that for Norway, it's a little bit less, because they are producing oil and gas, so maybe the prices for them is a little bit lower. I don't really understand the figure for France. Only 6.8%. It seems very low. Maybe it's because they have a lot of nuclear power, which is cheaper, to produce. But it seems a little low, honestly. But in average, it's very high, 10%, and the trend, it's still an increase of inflation. For example, If we take a look at Germany, this is over 1 year. As you can see, we were thinking maybe during June and July, maybe it was coming down, but actually again in August it's going up, you know. This is a significant increase in the CPI, but there's even much more increase if you look at producer prices. And here, so we're looking at Germany producer prices, and as you can see, the increase is absolutely, I mean, it's huge. It's 37% annually currently in Germany, and usually this price, you know, one day or another, it's gonna be transferred, this increase to the CPI. Okay, at least some part of it. So it's not the case for the moment, but we can say that in Europe, still for the moment, you know, there's a trend, a continuing trend of increase regarding inflation. Now let's take a look at the evolution of the value of the currency, the euro. Here we can take a look at the euro against US dollars. So of course, to evaluate the euro, we compare with the only reserve currency today in the world, which is the US dollars. So we have the evolution here since 2008. And as you can see, well, we have a strong decrease. The trend is very clear. We are today at the lowest point. There's been a very sharp decrease over the last few quarters, last quarters. And if on the other side we take a look at the value of the US dollars, you have to take a look at the DXY index. Here you can see it over the same period. You can see that there's a very strong increase, especially over the last few months. We are coming back for the dollar at the same value than the one we had in the year 2001. The problem here is that we have this strong decrease, and this we already talked about the balance of trade, which, you know, this is one of the consequences of this. And the problem here is that we could have some kind of a vicious circle, because the decrease, and we call it imported inflation. So the decrease of the value of the currency, the euro, is going to increase the price of the importation, because a lot of importation are, the contract for these imports are made in US dollar, because it's still the only world reference currency. And so it's going to increase, the price of imports, and then it's going to increase inflation, okay? And it means that it's going to create more deficits in the balance of trade. Therefore, it's going to decrease the value of the euro. So we may have some kind of a vicious circle here, especially because there's not a lot of commodity produced in Europe, commodities and also gas and oil. Regarding central banks, clearly they are tightening their policies. Here we can take a look at the total assets. Especially we can take a look at ECB in blue. Here you can see that the total asset is decreasing very, very quickly. In addition to that, we had in July an increase by 50 basis points on the interest rates of the ECB. Probably we're going to have another one in September, another increase, probably between 50 and 75%. 75 basis points, sorry. So clearly they are tightening their policies. We have here a declaration of a member of the ECB saying that we need to react more, strongly against this, to fight this inflation, even if it's gonna lower the growth or create more unemployment. So that's what she's saying and insisting on here on the fight, again against inflation. In Switzerland, it's different because they had over the last years much, not so much inflation, almost zero. So now they have some inflation, and also they are saying we must take robust monetary policy decision that will ensure price stability in a broad range of scenarios. So also over there, they're fighting, they want to fight inflation, as you can see. And clearly, this fight against inflation probably will lead Europe more quickly to a recession. So what are the solutions to get out of this crisis? First of all, what you need to understand is that we cannot find, the European cannot find quickly another source of energy different from the Russian gas in such quantities. It's just not possible. They can increase a little bit the importation of gas from the US or Algeria a little bit, but there's not enough quantity. Okay, they need much more to replace gas from Russia. So the first solution would be, to find a solution to end the war in Ukraine, or to start again the negotiation with Russia. I don't believe the probability is very high. But we never know. As you can see here, there's some lawmaker from the SPD in Germany who are started to ask for this, to ask for new negotiation in Russia. I guess they're starting to realize that the impact on their country will be dramatic. And the other way, it's the only one, is to decrease the consumption of energy. So that's the only possibility. So here we have a good analysis. So you can see here the evolution of the primary energy consumption over so 10 years. This is this part in orange. It's more or less minus 1%. And then after in gray, you can see the worst decline in energy consumption. For France, for example, it was during the pandemic, the 2020 pandemic. We had a minus 10% primary energy consumption. And in this analysis, so in red here, basically they are estimating what would these country need to do in terms of decrease of primary energy consumption, based on the fact that we need in Europe to decrease the use of gas by 15%. And so, for example, in France, this figure would be minus 12%. So it means that it's even more than during the pandemic, where there was a lot of people, locked in their home doing nothing. So clearly, it's going to be very, very difficult for the people to decrease the consumption of energy that much. So to sum up, basically we have a lot of indicators who are showing that we're heading to a recession in Europe. And when you have a recession, you may have a big drop in the stock market. So that's why you need to be careful. So here, first of all, let's take a look at the valuation of the stocks in Europe. Here we can see the price earning ratio. In orange, you can see it's a weighted ratio for Europe, and you can compare with the US. So basically in Europe, it's approximately 20, the price earning ratio, and it's more or less 30 in the US. So I mean, there's a big difference, that's for sure. It's not very cheap in Europe in average, 20 times. So maybe we have to look more into details. So now we can look country by country. So here you can see we have France, Poland, Italy, Spain, UK, and Germany. So a big part of Europe. So you can see the PE ratio here. So basically the highest is France, it's 25. So it's still pretty high in France. I believe maybe this is because of the fact that there's a lot of very big company with headquartered in France in the CAC 40. After we have Italy, Germany, Spain, and UK between 15 and 19. So a little bit more reasonable in terms of price earning ratio. And the cheapest is Poland, obviously only eight times for the price earning ratio. So yeah, I believe France is still very, very high. So we need to be careful about that. Personally, in this kind of situation, what I like is to own stocks in which there's not a lot of debt, almost zero debt. I like very high dividends, meaning more than 5, 6, or 7%. I prefer company for which the valuation ratio are very reasonable, and also I would prefer companies who have production sites, a lot of production sites outside of Europe, and also a lot of revenues coming from outside of Europe, to decrease this risk specific in Europe. Thanks for watching. If you like my videos, please subscribe, like, make some comments. This is really helping me to develop this channel. Thank you and see you soon. Bye bye.